Okay, today is Wednesday. It is 5:18 a.m. It is March 25th. One quarter of the year of 2026 is almost over. Today I was making some trades and I made some connections about the thinking that I had, which is a couple of things are like connecting together now. Okay, so now there is this Iran kind of an issue where it has issues with the global essentially it's a global disruption, okay, by itself. That's one. The second part is there's also the disruption of energy, okay? So those two things are compounding and disrupting as it is being a catalyst for the market. Okay, so that's the backdrop, okay? Then there's the other part, which is essentially when the price moves, it moves, okay? But it moves with a certain degree of it moves in a certain degree of being within a window, okay? Certain degree of being in the window. So the price just acts somewhere around there, which means that it is being it is essentially guarded, okay? So it moves within a band, okay? And so that's the second part, right? So there's the first part of the catalyst, the global, a macroeconomic catalyst that is there. The second part is the way that the price had already moved is that it hovers around a stable area. Okay, that's number two. Okay, then the number three. Okay, the number three is essentially the way that the price is structured. Okay, then the fourth is the way that the price moves. Okay, so there's the structure that's always there. There's also the way that the price moves, like it moves in a parabolic manner, or the candle doesn't move very much, so it's like holding for something. You can see it is holding. But when something is breaking out, it has a distinctive big candle that occurs. Whether it's, wow, look at gold. Gold is like taking off. Gold is taking off. You can make a lot. Wow, Jesus, you can make a lot of money on gold. Wow, look at that. It just popped. Wow, that is huge. If you have a lot of gold and that moves from there, that's like going into a cave and finding a mother lode. Wow. Holy Jesus. Anyway, so what I noticed is that the price, so even if the price moves against me, I look at it and I say, oh, it's actually, what I've noticed is that it actually floats within a known area based on the previous condition. And so it is still within the bound. So that's why the stop loss is so effective, because it's sitting. Wow, look at NASDAQ is going up too. Oh my God. Jesus. Holy Jesus Christ. Whoa. So what I've noticed is that a certain behavior of the market conditions defined by those conditions, which is the macroeconomic catalyst, which is the Iran condition with the oil energy issue, and then the second part is essentially the structure, and then the way that the price moves, and the way that it has been settled into a certain area, contributes to its behavior. And so what I noticed is that I was down like a percent. I thought to myself, hey, If I just held on to that, oh my God. Now, so what it will do is that when the price moves against me, I can look at it and logically think instead of just jumping out of it. I can see it. I can see it. There's a pre-formatted stop loss that I had, but when I'm trading in a manner where it's dynamic, then what I can do is readjust my thinking and say, yeah, sure, it moved that much, but I'm not going to add to a loser. Secondly, I know that it is within a certain band of price fluctuations that occurs. It's a known area, okay? And so it's going to sit there because I've seen it and the way that the price is behaving. I would feel comfortable allowing the trade to breathe a little bit. Also knowing that if I hold something a long time, it generally turns out to be a loser, because generally what happens is when I'm in profit, I just get out of that trade. Normally, that's what I do, right? Wow, look at gold. Gold is just like skyrocketing right now. My God. Wow. Anyway, so what am I getting at? I can see that the global macroeconomic conditions are impacting. And I noticed that the structures are impacting the way that I see it. And thirdly, I see that the way that the price moves, okay? The price will do this. So it's going sideways. But when the price just goes boom, 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 that's a change of character. That's a change of color. And the other part is when I am in a drawdown, okay, I have the common sense to not to add. But in hindsight, if I had added, I would have I would have blown this trade out of the water. But I didn't, okay? But if I did, it would have been a monstrous trade. But I allowed the trade to continue, okay, without adding to a loser, but observing it and then patiently waiting for the price to reclaim the point where I bought, and then finally exit the trade with a profit. Okay, so there are those. So the market, based on looking at the behavior of the market, I can dynamically adjust the way that I operate, the way that I steer my trade. Okay, I can steer my trade. Okay, so when I am in a trade, it doesn't mean that it is like over. Okay, I have the ability to adjust the way that I'm trading, which steers me into the right direction. Okay, based on newfound information while the trade is unfolding, because it's possible for me to not have all the information. So when I don't have all the information, it is possible for me to adjust my trading. Okay, of course, it's not wise to do it. But at this stage of my trading career, I don't have all the answers. Okay, I don't have all the answers. Okay. So what am I getting at? What I'm getting at is a trade is steerable. Yeah,